just going back to where we started, I know the medical teams all over the world are really tracking these numbers. For us as investment professionals, this will definitely not be the last pandemic.
Correct.
How does this change how we do investments going forward? No one was even imagining that they're supposed to be tracking a pandemic. What are your thoughts on this?
I think for us, we've seen a couple of pandemics before, as I think we've mentioned quite early in the talks. We've seen SARS, we've seen MERS. All these are viral infections. I think we saw HIV and AIDS. If we go further back, we've seen the Spanish flu, we've seen the bubonic plague. We've quite surely seen a couple of pandemics. But again, it's always impossible to predict when the next pandemic is going to hit you and what it's actually going to be. You could be now thinking, okay, so now we need to refocus on viruses. Then the next pandemic that hits you is drought, you understand? So it becomes a totally different ballgame. And now again, that sifts down all the way to us investors. So for us, in terms of how do we then prepare for another pandemic, for me it's impossible to prepare for a pandemic. It's impossible to even foresee it. So for us, it's just to make sure you're well diversified, especially in your portfolio. If you're going to buy Safaricom shares, make sure you're properly hedged on the derivatives or something of the sort. And it's always to act. I think it's time for us to shift to becoming active managers other than passive. Where you just buy and you buy your fixed income bond and you
sit on
the
it
entire duration for a year or 2 years. I think it's about time we start. Sorry about that. It's about time we start shifting that. And now become more active, become more engaged with our portfolios. Stress testing it every now and then. So just make sure two things: one, you're actively looking at your portfolios; two, you're actively hedged, and you're actively stress testing them.
So it's really impossible for us.
It's really impossible to foresee a pandemic.
But I want to imagine that somehow it's going to have an impact in how we try to predict trends and
it's going to inform most of how we foresee these things. I think especially if you're looking at the business cycles and the recessions, I think we've learned and history has taught us that every 10 years, after every 10 years, we always have a business cycle. You can look at your history over the last years. We've had the dot-com bubble. We've had the era of refrigeration. And they all have a 10-year space. Then came the phone, then came the internet. So I think now what investors have been doing is they've been every 10 years. I think 2008 or so, you saw talks of a recession that never came. And every investor was now pricing in on the portfolios a recession. Why? Because we just had the global financial crisis of 2008. So 10 years again, if you do your technical, it tells you that around this time in 2018, there would be a recession which never came. Unfortunately to us, it has now been brought by a pandemic that no one foresaw. So I think even for us in terms of pandemics, 2012 we just had the SARS and the MERS, 2003 as well. So for us it now almost seems like it takes another 10 years or so. We can work on those technicals, but we can't predict how accurate they're going to be.
They're not accurate.
Correct.
So definitely there is going to be a lot more variables that as investors will be tracking going forward, just to try and predict.
That's right.
And you're right. There is absolutely no way you could predict. One can predict something like this sort of coronavirus. But I think it's going to be in people's trackers going forward.
It should be.
Lots of lessons coming from this. So just to switch to the next thing, I mean, it's almost 2 weeks since we started tracking this COVID, you and I.
Correct.
And it's good to see that you're still surviving. You're COVID free. I'm COVID free.
Hopefully, you're not asymptomatic.
Of course. And I hope that we'll keep this conversation going and informing investors on what's happening. Just looking at the market indices, global indices, Africa indices, even locally here in Kenya, how has the impact been from a market's point of view?
Interesting question. I think over the last, it's been 2 weeks since we started, as you said, since we started tracking this. And I think during our last conversation we were talking about what the governments are planning to do. So fast forward to now, we are now seeing what the governments have done here in Kenya. Yes, we were lagging, but then again globally what has happened. So if we start with the leader of the world, which is the America, I think we saw they have by far the mightiest and the biggest stimulus package that they just passed, I think, 2 days ago on Thursday evening.
Maybe before we go to the government packages and directives, just to wrap on the impact on the markets.
Okay.
S&P 500, how has it been tracking?
Dow Jones,
the NSE, All Share Index.
So it's been they've been very volatile. I think if there's one word to talk about them is they've been very volatile.
Yeah.
So one day they're up 6%, the next day they're down 6%. You know.
Yes.
So it's been 2 weeks of proper losses and gains. So I think net we are still, I think if you're looking at the Dow, we're still talking about 19,000 levels. We are not back to the 23,000 level we were. Though we've come up from 18,000 levels. If you look at the S&P 500, I think as of yesterday it was up 4%, just basically from the stimulus we'll talk about. If you come to the NSE, I think Subcom has been by far the most resilient. We've seen the all share, we're still if you talk about the NSE 20, we're talking about 1900 levels. These levels were last seen in, I think, 2003.
2003, yeah.
Yes. If you go to the the L share index, it hasn't really changed much. I think only gained a bit. And I think we're now talking about 156 levels for the all share. And by far the most resilient stock has been Safaricom, which has heavily supported it here.
Which is almost half of the market.
Yeah, which is almost half of the market.
So that is saving the grace.
Correct. It is. It's 51% of the index. So it's really saving the grace when it's steady. The rest of the stocks have been severely punished.
I think I was looking at the numbers, and I think S&P, Dow Jones, they're all at least negative 20% year to date.
Yes.
I think the NSE, we are doing something like 28%.
Correct.
28% negative.
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 You go to the Lagos, we are talking about 33%.
33%. Yeah. And of course, Lagos has been affected by the oil price war. It's
been a series of bad news for them, as you mentioned.
Totally. So there's a lot of value that has been shaved off, investors, wiped away. And I don't know, what's your feeling? We've seen the markets attempting to come back on, and then you see again a slide.
Yeah.
What do you think is going on in investors' minds?